Hello, hello. How are we doing tonight? I am doing amazing. Thank you. A little tired. Had a big day. A lot of trading, of course. I did look to trade the PM as well. So, very, very packed day today. And I don't know about you guys, but when we do a lot of back and forth and I spend hours in front of the charts, it really drains me. So when I have the rest of my day to go on with, it's a rough day. It's a rough day. And when we finish, we're tired. Yeah, as I said, I don't know about you guys, but that's how it is for me on days like this. But we'll review it, right? That's why we're here. And of course, after yesterday, there's nothing other to expect from me than a retracement, especially on a Thursday. It aligns beautifully. You'll see Thursday retrace the weekly expansion quite often, looking for a Friday continuation, right? Just looking at this daily chart, right? Noticing the huge down gap, right? We already talked about it yesterday, but the huge net gap. On the next day, you might say that it's going to be lower probability, right? What are we going to see? We're going to see retracement, sure. But when we're talking about retracement of 1,000 handle move, you're still going to see quite a large range, right? Going into the next day. And if we look, we still had, I keep duplicating them, sorry. We still had a 350 handle move. So we had plenty of room for opportunity on a day like this. I did want to point this out. And as I said, I did not anticipate anything other than retracement. Retracement where? Well, I'm referring to this range, right? This is the range that I want to see us completely trade against. You can also refer to this range, but I'd prefer to use the larger range in this case because it is the most recent expansion, right? Expansion, retracement, expansion. This is part of this move. This is part of the same move. So I regard it as one range. So expansion, and now we're looking at reversal / retracement, right? So our objective for retracement was right here. Let's frame it out. But where am I going to look if I'm looking for continuation opportunities? Premium inefficiencies, more specifically, first premium inefficiencies. So I had this inversion fair value gap on my chart today. And it seems pick and choose, sure. It seems like, oh, you chose this with hindsight. Perhaps. But I'm not anticipating a large retracement, so I'm not going to refer to my most recent bearish range. We're not done expanding. We're not done creating that range. So just by looking at old premium arrays, I can use these arrays for good continuation opportunities. So pretty much I was looking to long up until this point, which I am just going to draw with, actually, you know what? Let's try it correctly. Fair value gap low. So I'm going to call it inversion fair value gap low on a daily chart. And I'm going to go and plot the high and say that is a daily again, and that is the high. Sorry, as I said, might be a little slow tonight. I am extremely tired. Big day, right? But I'm going to mark them out correctly. So I was looking to long up to this level and then short from it. Now, why not the other inversion fair value gap? Well, as I said, this is at equilibrium. I'm looking for premium inefficiencies. And this is only in the case of continuations, right? Well, only time I'm going to be looking for continuation opportunities, I'm going to look at the fact that we haven't yet created a range. So I'm going to refer to the older range. Pretty simple stuff there. 15-minute, what do I look for now? I have a trade idea. Let me go in replay mode here so we don't see Friday's price action up to now. How am I going to frame my trades? How am I going to decide what I'm going to be trading? Well, power of 3 is my filter for all. What did we do on open? Accumulation. We're doing a lot of back and forth, retesting extremes. What does that form? Equal highs, equal lows, of course. Sure. But what is that framed as? Consolidation. You can also call it accumulation, specifically if you're looking for an AMD pattern, right? I'm looking at how the daily candle is going to develop. And I just noticed, actually, I don't have it on my chart. So let's bring that guy back. There we go. By the way, this is power of 3 indicator by 2 degrees. Definitely would recommend it. I was testing that out. And I also sometimes use the liquidity depth for previous day high, previous day low, if ever you were wondering. But looking at this, what am I looking for? Power of 3, right? So I have my accumulation. I'm looking for a manipulation right after this, which we got right here. Please let me draw. Thank you. We got our manipulation move, right, to the upside. And then what am I looking for? Well, as we frame from our daily chart, I move to this inverse fair value gap before going lower. Now, something I'd like to mark out, this is a level I had on my chart as well. This is how I draw my higher time frame fair value gaps, by the way. I have a 0.5 to know the midline. Sometimes I add text to it. It's not showing up right now, but once I go to the lower time frame, it's probably going to show up. You can add text to Fibonacci tools. There we go. I just had to click on it. So you can add text, and I'd say IFVG mean threshold. This is just my naming convention. I like to do this, and then I have the time frame right between. So I'll mark it out like this. So I have my level, I have my mean threshold, I have two other lines as well for my levels, and sometimes I like to make them a little bit more width just so they're easier to see. If we go down to the 15-minute, see how our 15-minute closures, our intraday time frame respects this level. I don't care about the wicks. What's important to me are the bodies, right? So this is just as confluence. I need to know about this mean threshold? Not at all, right? We already had our plan. Once we hit this level, this is where I start shorting. But what are you waiting for? Well, first of all, I know I have 8:30 news, so let's mark this out. Moreover, I also had us a 10 a.m. news that is now an orange news, but used to be a high impact news. So that's one that's hard, right? Home sales was the news at 10 a.m. It used to be a high impact news on Forex Factory, but now they switched it over to orange. I disagree with that, and it is the only reason why now when I send the news, you'll see I also include orange folder news, and what basically Forex Factory frames as medium impact. For me, that news specifically is still a high impact news. So what do? Well, I treat it as a high impact news. That's why I can't wait to implement news data directly in Rice Statistics so that I no longer have to use Forex Factory at all. Coming soon. I'm tired of saying I can't wait for this, can't wait for that. I'm working on it. It's coming. It's coming definitely. Sorry, my OCD was hurting me there. So I'd be waiting for 10 a.m. nonetheless. And from that point on, you went into your higher time frame inefficiency. I see Justin in here. You had a strong reaction out, right? Touch the order block and have a strong reaction out. If you remember that, that was a while ago. But from that point on, I was only looking to short. Since I'm waiting for 10 a.m., what do you see at 10 a.m.? Well, you see an open high, but you don't have any entries here. You don't have any entry opportunities. The only bearish fair value gap I see is this one, and we invalidated it. And now going forward here, well, actually, this could be an entry opportunity. Let's look at this. Yes, we did sweep this high, which I missed. Did you have SMT? You did. You also had SMT at this high, right at the news. You had your bearish breaker right here. If we just mark it out, let's remove the text. Not much room there. Now that fair value gap is in close proximity, right? I talked about this during the PA review. 5 handles within 5 handles, beautiful. So I would have looked short there. I guess I'm lucky because today I missed that one, and that was a loss. So I still want to mark it out for transparency's sake, right? I would have looked at SMT. Why? Because fair value gap, order block. So my 3PD array stop loss rule is right there. And my target would have been at London low, which I did forget to mention. So we're just going to go back here. Because it's so obvious here, you have those relative equal lows at the low of day. That is a very, very clear objective. And that's also our PD array. If I go back to the daily, that's your retracement objective. So if you want to frame this whole down move, project never stopped with you, man. Definitely, Justin. But if I want to frame this whole down move, not as a retracement, as a reversal, we have to invalidate my retracement objective. So first discount inefficiency is my retracement objective, my daily fair value gap here. And if I want to keep shorting, we have to invalidate this, right? So that's my objective, pretty much. Invalidating this confirms that we can keep going lower, right? Maybe in the short term we'll retrace, but that my bias now becomes in the midterm lower towards these levels that we've been talking for weeks now. Did want to point that out. But you have additional confluence by looking at the range from 2 to 5 a.m. Let me just mark that out. So 2 to 5 a.m. That's 5:15 here. So it's going to be this high. This is the London range. And let's do purple. That's the color I like for it. That's the London range. What did we do overnight? We took out one side, right? Took out the highs of the London range and left the lows open. The lows become your objective. That works 67% of the times, no matter bias, no matter nothing. That is the London Rate Framework from ICT's One Trading Setup for Life video. This, 65% of the time, always. You want more in-depth data, it's all in Rice Statistics, right? Where you can filter. It is one of the frameworks that I trade the most. So that would have been your partial objective. Also, even more beautifully, see how all this low resistance liquidity stops here before you have any defense? So that would be a good opportunity to partial along the way to London low, and then having your final objective, of course, at the current low of day. And from that point on, that's just about holding your runners, right? I'm trying to get used to typing out everything onto it because I'm always referring back to those lines. And once you go down to the minute chart, it's kind of hard to see them. And let's actually make more room. From that point on, as I said, you started the day with a loss if you were looking for London low, as I was. And, well, I mean, to that partial, RR is just not present, right? So you have 2R that you're looking for. I'm not taking profits at 0.95R. Could have had a quick scalp for 40 points, which on any given point, that's a great number, but it's just not an opportunity for me. From that point on, your target is met. Do I reverse here? No. I'm still expecting London low. So I'm not going to frame any possible longs until London low. And as we framed from our daily bias, from the point we hit this inversion fair value gap, I'm bearish. So I would not consider anything else than bearish. So even as we trade to these highs, I am still only looking for shorts. And the truth is that in this price action, we just did not get an opportunity to short, right? Do you see a bearish breaker? Not up until this point. So you would have had no opportunity to short at that point. If you did trade before 10 a.m., right, you did not wait for that specific news, then of course, right? And especially, what do I say about news? I like to go and be transparent with you guys. So when I see a loss, I want to show it to you guys, okay? But the truth is, I keep reminding everyone that the only time that I trade before news is when I see a clear Judas swing at 9:30. So let's look 9:30. Do we have a clear Judas swing? Well, on NASDAQ, it's kind of hard to see. But look at a yes. Clear Judas swing. Why did NASDAQ not do the same exact move? Because it needed to form SMT. So of course, NASDAQ was way weaker. So it did not do the same move. The truth is, you had a beautiful time-based manipulation, time-based Judas swing, right? That's basically what a Judas swing is to me. It's a time-based manipulation. So I sometimes mess around with the naming convention, if I can say it like that. But definitely have that. So now it's a little hard to see. So let me just bring it up. You had divergence at a time that you're looking for divergence, right? On that 9:30 open. Followed by what? Okay, well, sweep of liquidity, SMT, time. What do I need next? Breaker. This SMT created this breaker right here. Because since ES took out that level, if I hover over that candle, you'll see it right away. Since ES took out that level, I can treat NASDAQ as if it did. So this is not a failed order block, or this is not a mitigation block. It is a breaker block. And if we look, what is my first overlapping inefficiency? Well, it's that bearish fair value gap. Now, 3P area stop loss rule right here, you'd have inversion fair value gap, inversion fair value gap, fair value gap. You would have gotten stopped out right here. So I'm not going to lie to you. It was not a good day for the Rice model specifically. Now, of course, perhaps you place your stop higher. Okay, 72 handle. I still would not have taken a trade. Maybe you waited for price to retrace deeper. Well, okay, now you can justify it, but this is variance. This is what I like to call bullshit, just in general. And it's not because the trade is bullshit. The trade is great. Right? You have a great opportunity. You had a huge risk to reward potential, right? Ending the day up 10R if you waited for your final objective to be met, which it was met just before the end of the day with a lot of scares along the way, definitely. But the truth is, if I'm entering here, I'm looking for a mechanical entry. This fair value gap, this is a correct entry. This stop loss is a 3PD array stop loss rule using the inversion fair value gaps here, 1, 2, and the fair value gap. This trade, you guys know, if you've been in more than one PA, you know, you've seen that every single day we look at every single setup and all we do is win. Okay, I'm not gonna lie. This is not financial advice. Of course, you guys read the disclaimer. But the Rise model is extremely consistent. But on a day like this, for me, it would have been all about loss and loss. See, for myself, I did not take a loss here because I didn't take a trade here. I was waiting for that 10 a.m. specifically. On the 10 a.m., I did not take the short. We were just too deep in the range for me to consider taking short. And then I just watched price just bullshit without me for almost an hour and a half until 11:10. Did not look to consider any single trade. So from that point on, I was just done with the day. I did look at the PM session, which we'll look at in a second. But for me, the morning was just this loss and this loss that we just viewed, right? And yes, you can justify moving a different stop loss, whatever. But the truth is, it was a loss. From a mechanical standpoint, this was a loss because I used the 3PD array stop loss rule for my breaker block, for my stop loss placement, sorry. And this one just, once again, unfortunate right here. It barely went down, then decided to start a retracement, look for continuation entries. After that retracement, just didn't get a unicorn entry. So I'm transparent with you guys. I tell you when it's a good day, tell you when it's a bad day. And today was a bad day for the Rise model. It's been the first in a while, right? But they do happen, is what I'm trying to say. Now looking further, 1050 macro. I don't trade the 1050 macro very often. We can look at it very quickly, but here, 1050 to 1110, same exact things that I'm looking for, right? What am I going to be looking for? I'm going to be looking for short, right? What is the first bearish breaker I see? Because that's what I'm looking for when I'm on my charts, right? First bearish breaker. Is this a fair value gap? That is a fair value gap. Okay, I did not spot that. I'm not going to lie to you. Because I would have said there is no entry because right here on this inversion fair value gap, personally for me, I was done with the AM session after a loss. That's just my rules. When I take a loss in the AM, I can look at the PM session if I want, but I'm done for the AM because I get triggered very easily and I tend to chase. So if I take one loss, I usually stop there, right? Just on days where I'm not feeling too up to the task, I prefer to just have -1R. Oh, I could have made 3R. Sure. Whatever. I don't mind missing. I make enough, right? But inversion fair value gap, and then we basically pretty already mitigated it. But you did have an entry. So you formed the fair value gap and formed the breaker there. Then you traded back, forming this fair value gap that we're looking at right now, which would have given you an entry. Now, once again, it does seem like inversion fair value gap here, fair value gap, order block, or you could have framed order block. Sorry about that, guys. These order blocks are the same. They're at the same level. So I would not have considered those, but this seems like cherry picking. So it would have been here if you considered these order blocks as 2 order blocks and not just as 1, since they're at the same level pretty much. And if you use the inversion fair value gap as your third PD array, you would have been fine. But still, I would have looked at here for a partial. Would have been a decent trade there. But if you use the both order blocks as a PD array, then you would have gotten stopped out in one candle. Truth is, I didn't even have time to enter. That's why I like market orders. If you saw this candle live, which I did, it was very aggressive. Very, very aggressive. So if I'm looking to trade here, I didn't even get time to enter on this because it just blew past it. It did not tap into it, react. It blew past it. But you had to be live in front of your charts. And if you use limit orders, which I do recommend for new traders, it would not have worked out. So starting the day with 3 losses would not have been good. And for me, at least, it would have been the end. It would have been me telling myself that I tilted today and having to take a step back. Had to mark it. Yeah. So if you marketed on this one, it is not a loss. Definitely. I took that, couldn't partial because of CFD farm and automatic entry BS. Was aiming for Asian lows. So yeah, current low of day. I don't like calling them Asian lows in general because I like calling them current low of day. That's just personal preference, to be honest. But definitely it was nice. I would have looked to partial right here just because of, look how high resistance this is. Truth is, if I took that trade, got stopped out here, and then saw the delivery just be so painful, I would not have even considered taking this trade, right? Well, I mean, I told you guys, I did not trade this today, right? It was too deep in the range nonetheless. This I could have considered, but even then, you look to the left and you're like, okay, high resistance move, low resistance retracement. Oh, that's a nice expansion. But what do you see after low resistance? High resistance. Once again, high resistance, low resistance. We just consolidated in the morning, which is to be expected after a 1,000 handle move on the previous day. In the PM, right, just so we can get over it quickly, you're looking at the lunch range. That's what I'm always looking for at the PM. That's actually not during lunch, that specific high. So it would be this one, if I'm not mistaken. Yeah, that's noon right there. There we go. So you have the lunch range. I'm looking for a lunch rate. What did we do? Right at that 2 a.m. mark, 2 p.m. mark. Let's actually bring our 2 p.m. open here. I have it off because I trade the PM session so rarely. Right here, we rated the high of the lunch session range. What is going to be your target? Lunch lows. And look at this. We align beautifully, form a third equal low, right? Just inducing Asian lows. Beautiful market maker model here, right? Buy side of the curve here. I'm been trying to use the same curve, but let's just forget about that. Buy side of the curve right here, followed by the sell side of the curve. We just didn't have nice delivery, but it was a beautiful market maker model. Definitely. It was just very, very high resistance on both sides, to be honest, but definitely very beautiful delivery in terms of getting to your objective, right? We went to the inversion fair value gap and then distributed all the way back to current low of day, our accumulation of the day. Just to get back on track here, looking at this, what are you looking for right after this? Well, first of all, I need SMT. Do I have SMT? Yes, I do. I can look at this is not it. This is it. I can look at this one point and see how ES made a higher high at this point, took out that liquidity, while NASDAQ did not. What does this tell you? There is divergence. There is smart money. How can I say this? It is a smart money back move, I guess. I'm forgetting the exact word. Participation. That's what I was looking for. Sorry, guys. As I said, big day. But there was smart money participation in that move. I can now use this divergence, look for a breaker block. Where is my breaker block? I'm now just going to remove this because it's the same color as my breakers. The first bearish breaker block to form is right at this level. Did it form a little earlier on ES? It did. Now that's a weird one, right? Because on ES, it formed right here with SMT. Does that mean that I can enter early on NASDAQ? Yes, right? Because just as we look for SMT on the highs, we look for SMT on the lows as well, which this is not it. Well, there is none. But here, I'll continue my point just to make sure. In this case, it would not have been valid. I do want to point out, I was looking a little too quick there. But just in general, if you have SMTs on the lows, I treat it just as SMTs on the highs and vice versa. If, let's just say ES took out that level, we just imagine something right here. Because it's this candle. Okay, so let's just say ES took out that level. That's why I was looking at SMT. I was looking at candle to candle. Took out that level. Okay, well, I can treat NASDAQ as if it did take out that level. And if it did take out that level, then this is a breaker. Then this means that this is a unicorn, which I can take to enter. But even though it is not important for us in this specific criteria, if we look, as soon as we made the breaker right here, we also made a smallish guy, a small fair value gap. Do I care about fair value gap size? No, I've said it 100 times. It does not change a thing for me. A fair value gap is a fair value gap. Is it overlapping with a breaker block? Yes, it is a unicorn. Check, check, check. I'm ready to take a trade. Where's my stop loss? I have an inversion fair value gap here. By the way, if you're having a hard time, if you're utilizing this 3PD array move, just think about it. Why am I using the little dot? Or you can use the cross, which I think is the default. I just prefer having the little dot there. Why do I use the dot? So that I can see a horizontal line, right? And then I look at my entry and I look at anything above or below that is a PD array that I can use for my stop loss. So I look vertically, right? Horizontally. Oh my God, I need to go to bed, guys. I do apologize. I'm all over the place tonight. But so fair value gap, inversion fair value gap, and then fair value gap above gives me a really great stop loss there, to be honest. And where would you look to? Well, since I'm up so much in RR, I'm probably going to look to partial here. And look at this. If we look at our most recent intraday expansion range, right? That's how you find your objectives, as I've said in the Rise trading model video. What is my first discount and efficiency in a 5-minute chart? This level. So see, the more you trade, the more you start to notice these levels. And I don't need to open a 5-minute chart anymore. It's just the 5-minute chart always aligns with the levels that I know are the objective. But for me, what I'm looking for is I'm looking for the last consolidation, because I'm always trading market maker models. So I see all of this is low resistance. It's going to expand, tap into here. I'm looking for this level as a partial. And if you look right here, you would have reached that partial, been pretty happy with those results. I don't know about you guys, but I'd be pretty happy with taking out half my position here, 1.5R. Let's just say you lost 3 in the morning, then now you're already half back and you're only losing 1.5R. So that'd be nice. And if you held on until current low of day and you took out 6.4, remember you only have 50% of your position left, which means what? Well, actually, I'm talking about this, but there is no way I'm holding for current low of day and not being break even, which means you would have gotten stopped out break even here if you let it go this far. If you see it, take out liquidity right next to your level, and for 10 handles more when you were up 99 handles almost, what is that, 88 handles, and you greeted for that level, and that's your problem. Personally, I've said it a lot of times before, and I've actually used the real rules I used when I was explaining it. I always use the implied dealing range when I take a trade, and not up to that level. Let me just fix the low from my objective to the high of my framework. So in this case, I'm trading a lunch rate framework. This is my framework. I'm only looking to take entries above half, but once we get to that last quarter, it should reach my objective right away. If it doesn't, if it induces my objective, I'm taking out my trade, which means that my stop was here and I manually exited like probably right on this candle. If I'm being honest, as soon as I see the reaction and it's not a continuation from that fair value gap, I'm out. But let's just say we use a mechanical rule for it. I would have been out at this level at my third quarter. Because once we dive into this, once we reach this, I'm supposed to head right away to my objective. So that's just about trade management, right? When we consolidate a high resistance day, that's when there are a lot of, oh, well, if it does this, then I do this. And that's where experience comes in. But the truth is, most people trading my model today would have just gotten 1 loss or 2 losses in the morning and stopped trading for the day, right? That's what I expect, just in general. Why? Because that is what you should do on a high resistance days like this. Was there opportunity? Yes. Was there successful frameworks where the draw is easy to understand? Yes. Just like every single day. The only difference is that today the delivery was rough. But you did have a wonderful trade here. And yes, that's where I would have taken profit my final area. I would have probably left a runner just in case, since my objective was not reached yet, but definitely would have been break even and would have gotten stopped out right here at 324. So would have had take profit 1, take profit 2, which actually I would have been in profit for the day. So loss, 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 win, profit. Personally, I took one loss in the morning, which was it was very early. I did not short right here. I tried to short somewhere in here, and I got stopped out by this move. This move at 10 a.m. I remember. So I tried to short a little late somewhere in here, and I got stopped out. I didn't trade my model. It was a mistake. It should not have been a loss. Like, if I lose this trade, it's like, okay, it's a loss. I follow my rules. The trade was good. Even if it goes to my objective after, I'm like, I executed correctly. So I know that if I do this every day, then I'm going to make money. But this morning, I personally made a mistake. Once again, for transparency's sake, it was not my day, guys. But I did catch a piece of this PM move. To be honest with you all, I fully closed my trade here. Why? Because I was satisfied. It was a rough day for me. As I said, spent a lot of time in front of the charts. I just wanted to keep my piece and get out. And at that point, I closed the day up 1.6 R, if I'm not mistaken, right here. So with including the morning loss, I finished the day with 1.6 R profit. So that makes sense, actually. Probably had a little bit of a worse entry somewhere in here. Yeah. Minus 1 R plus 1.6. That makes a lot of sense. But yeah, it's overall definitely a day that moved well, that did where it had to, but just didn't do it in the most efficient manner. You had a lot of high resistance, a lot of aggressive retracements higher, but that PM move was definitely the cleanest, in my opinion, right all the way to right here, which is just a random low. I would have definitely looked for it to trade to the next low, the equal lows, current low of day. But what can we say on low probability? And as I said, using the implied dealing range, definitely would have adjusted and at least gotten stopped out right here. Do we have any questions? I feel like it's the type of day where there might be a few questions about how price interacted, or maybe one of the 50 things I said today. Not seeing any of you guys type though. So I'm guessing I went pretty in length there. We've been in here for 30 minutes, so probably. Awesome. Thanks for us. I appreciate that. All right, guys. I'm definitely going to go to bed now. Thank you for being here. It is my pleasure, Kim. Definitely not the best days for me. So I apologize once again if I'm a little tired, a little less upbeat than usual, but I am heading to bed right away. I do have these days. When you work extremely hard, you guys probably know, right? Any trader would probably know. Sometimes you just get those down days. So I'm going to go ahead and actually post that recording first, and then I'm going to head to bed. So I wish you guys all the best of luck trading tomorrow, and have a great rest of your night. See you guys.